What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday, and that means it's time for the FANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technicals of the week from the major FANG stocks, plus Microsoft and Tesla. It was a big week of earnings this week. We had Apple, we had Microsoft, we had Tesla. That means next week we got Facebook, we've got Amazon and Google, and then shortly after that, we'll have NVIDIA report their earnings, and we'll get the totality of the earnings from the major FANG stocks. Kick things off like we always do with Facebook. Started the week at $315 per share, slid sideways or down slightly to about $300 per share. You know that $300 per share is a major technical level, and boy, we're seeing a lot of volatility with these stocks. Really interesting from a technical segment. We'll get there shortly. EU conditionally okays Meta's $1 billion customer acquisition. This was an acquisition that Facebook started not several years ago, but about a year ago. They wanted to acquire this company in November of 2020 for $1 billion. This is essentially a company that manages your customer relationships. And I tell you what, I see a lot of people doing business and doing commerce, obviously on Facebook, but also WhatsApp as well. And the integration of this should be good. Now, what I did like, I don't always like what regulators do, but over in the EU, I actually kind of liked what they did. They said that Facebook essentially needs to keep this open, keep the APIs open, keep support for different customers, allow you to pull your customer management data off of this, and then transition to a different software if you wanted to. So I like what regulators did here, and it clears the way for, I think, a key piece of this. Might seem kind of little. I know $1 billion is a lot, but to Facebook, it's not really that much. You're talking about an $800 billion market cap company, but I think this is a key piece of the puzzle to really start tying things in over at WhatsApp and really tying that in. It's already a really big business commerce platform. I think this could tie it in and make it even better. Diem is reportedly to sell its technology to Silvergate Capital. Diem was formerly Libra, which was a kind of a conglomerate of PayPal and Stripe and eBay and many other businesses had gotten together. They were going to form this essentially like this stable coin or this cryptocurrency that was going to be used on Facebook and other places. It was going to be pegged to a basket of currencies, more specifically the United States dollar. This is kind of disintegrated. Some of the members have started to pull out. Apparently, they have enough technology here that they can sell it to somebody, but it basically looks like we're putting the wraps on that in terms of what Facebook's involvement is with that. Now, Meta Platforms details a new earnings report structure ahead of next week. So basically what they're going to do, if you follow the channel and you've seen our review videos or our earnings videos on Facebook, it's really just advertising and that's it. They've never broke out like kind of the Oculus or the hardware and the other types of software related to the Oculus, where they're going to start breaking that out, but they'll also have the family of apps, which is basically Facebook, Instagram, Messenger, WhatsApp. And so we'll see that kind of broken out separate from the Oculus. So for the first time, we'll actually see kind of, concrete levels of sales, concrete levels of profitability in there. And I think it will be really interesting to see how profitable that is based on what we've known that they've invested and spent on that. And it'll be interesting to see kind of the operating margins that business runs on, because we already know the advertising business over at Facebook is one of the highest margin businesses on Wall Street. Now let's see where their products stand, and it could spur another leg of investment or another kind of re-rating of the valuation over at Facebook. Meta created an AI supercomputer that could be the fastest in the world by this year, 2022. Now, I don't necessarily think this is the big news. They've obviously are working on these things. What I thought was actually the big news is what are the chips inside of this thing? So they are NVIDIA's in terms of the GPUs used in the system, and NVIDIA's on the cutting edge of this. This is why you see their stock where it's at, and certainly AMD can be thrown into this bunch as well. And then when you look at an Intel, that stock has obviously not performed very well because they're not necessarily on the cutting edge of these newer supercomputers. Moving on to Apple, started the week at 164, reported their earnings yesterday, and bubba boom, we are back up $11 today, nearly 7%. That stock popped like it's hot. Their earnings came in yesterday. We had a video on it. You can check all our earnings videos on all these stocks. Go to our feed here on YouTube and you'll be able to see all these stocks. Apple was up 11.2% year over year. They had revenue of nearly $124 billion. For the most part, it was about as juicy as you get from a operating income perspective, operating profits, across the board, Apple just looked like they hit it out of the park. The only things that were somewhat concerning was that you had iPad revenues pull back from a previous period, but all the other business segments look like they're running on all cylinders. Now, supply chain issues did contribute to the fact that iPad sales slipped just a little bit in the most recent quarter earnings, but it looks like they are on the path to improvement. Tim Cook talked extensively about this, and it looks like they say that they're still experiencing these supply constraints, and they are a little bit higher in the September quarter, but they still don't think it's not getting any easier, but it appears, at least at the current time, it's not getting any worse, okay? And so that is probably a good sign. When you put up a quarter like this under those conditions, the fact that it doesn't appear like it's getting any worse is a good sign, and maybe we start seeing signs that it gets better towards the tail end or maybe even the back half of this year. Apple is working on software to let small business owners take payments directly from their iPhone. Essentially, how this would work is if you have one of these iPhones, somebody can come up with one of those credit cards that you can tap, or maybe you have Apple Pay or Google Pay on your phone, and you can come up and pay directly to another iPhone. Now, not necessarily the most groundbreaking thing. I saw that Square stock and some of the other payment stocks reacted on this. I don't necessarily think this is a direct hit at those companies, because if you have a brick and mortar business and you want one of those Square terminals or something like that, I don't think you're going to be holding up your phone to take payments. It's nice to have one of those terminals that tracks your inventory and all type accounting and those types of things. This is really just another way to kind of exchange money between two phones. I don't think it's a direct threat yet at Square and others, but it could take some business away from them, especially from maybe the more casual user of those services. Now, Apple to unveil its widest array of products in its history this fall. This is according to Bloomberg. Basically, they're going to just unveil everything, okay? A new watch, a new Mac Pro, a new MacBook, a new AirPod Pros, all new phones, obviously. Most of this stuff we can expect. Now, what we haven't seen over the last really 2 years from Macintosh is a new iMac, which is their, screen. Basically, it looks like a big screen, but it's a computer. Also, the Mac Pro, which is a niche device, but extraordinarily expensive and certainly useful from some developers that need that much computing power. This is basically just essentially a Macintosh supercomputer, I guess you could say. And we'll see updates to the M1 chip as well. We'll probably see an M2 chip. I don't know if they'll change the name of it, but we'll see updates to that. We'll see new MacBook Airs. We'll basically see the entire product line of Apple refreshed, and that certainly will probably be good, I think, from a revenue and earnings perspective. Moving on to Amazon, start of the week at 2,976, and this one is underneath the technical range as we head into earnings next week with Amazon. The stock's trading about $2,880 per share. Amazon is backing a House Republican bill that ends a federal ban on 420. And so, look, I don't know necessarily why they're backing this or why this story came across. I have two theories. Number one, they have a ton of employees, and so maybe it clears up some stuff that they have with these employees. Obviously, when you have that many of employees, some of them or a portion of them will use substances like this. The other thing I could be thinking about, maybe Amazon wants to sell this, okay? And look, the House bill, there's a couple bills being floated. Whether and what gets done in Washington, I have no idea, especially right now. It just doesn't seem like there's a lot of appetite to get anything done. And I think the closer we get to November, I think the appetite to get anything done will get less and less. And it'll be interesting to see the after November, what happens the final 2 years of the current presidency. We'll see what happens. But there's actually a bill floated around in the Senate with a 10% tax on this item. Well, this House bill has just a 3% tax. So this is obviously all about that money. Okay, they wouldn't be doing this if it wasn't for the money, but it'll be interesting. Now, I do get just side topic. I get a lot of requests here on the channel to talk about 420 stocks, and we just don't do it here. Okay, for a number of different reasons. Number one, all the companies suck. I would not put my money into any of these companies. They all look terrible. I've looked at them. They look garbage, but I also have a lot of teenagers and pre-teenagers that I know personally watch this channel, and those are not companies that I want to recommend to them. That's just how I feel. Amazon might be one of the biggest wild cards of the electric vehicle industry. Obviously, they have this massive stake in Rivian. I remember I posted a video on Rivian. I think it was up over $100 per share, and the title of the video was "This stock might be one of the worst investments you can make." And right right now, that video is aging incredibly well. While the stock was up 5.9%, the stock is now trading at about $57 per share. But they have this massive stake in Rivian, which reports earnings sometime, I guess, fairly soon. They haven't set a date for that, but they agreed to this deal with Stellantis. Obviously, if you've been watching our show, you know that Amazon has a huge appetite for these EVs. So this article is kind of theorizing like, this company has a huge appetite for EVs. They've got this big stake in a company which doesn't appear anywhere close to actually delivering on that. And in fact, it looks like Amazon is starting to look elsewhere. Well, this is a company with the R&D budget and the revenue and certainly the leeway with investors, at least in the current time, to make big investments here. And we'll see what Amazon decides to do. Now, Peloton's collapse spins up Apple, Nike, Amazon chatter. So at Peloton, as you know, this stock over the last year has just been obliterated. This was like well over $100, $150 per share, and now it's $25. Oh my goodness, that is a slashing of the valuation. Peloton is now worth just $8 billion on that market cap. I say just because these tech stocks, as you know, and not necessarily, Amazon has a fair amount of cash, but certainly someone like Apple, they basically fart $8 billion, in an afternoon. So they could easily buy this. I think this is an acquisition that could get by regulators as well. That's the other thing that we have to think about. But I think this is something that is just being rumored, I think, by analysts that might need to prop up Peloton stock for whatever reason. But this company, the further it goes down, the more likely somebody will take this out. We saw this with Fitbit, actually. Fitbit was very similar to Peloton, okay? It was a stock that got a lot of hype, and for some reason, people really liked the stock, and then everybody realized it was just a fitness watch. And I think the same thing with Peloton. It's just a bike, you know what I mean? And it's just a treadmill. I personally like the product. I use the product basically every day. I like it, but the stock sucks. And so I think at some point, somebody will come take this out for a premium if you know Fitbit was eventually acquired by Google. Moving on to NVIDIA, started the week at 238, ended down to 228. Boy, this one's getting down and into a range. Obviously, I think we're about 2 weeks away from NVIDIA earnings, so we don't have that catalyst yet. Now, NVIDIA fell this week as it reported that it was going to drop its $40 billion deal for ARM Holdings, which is owned by SoftBank. SoftBank acquired ARM in 2016, I believe, for about $31 billion. This is absolutely fantastic technology. It's being used inside of a lot of phones and a lot of newer chips for laptops because ARM's technology is much more lower power. It creates less heat, and it has, obviously, when you create less heat, you need less power draw. And so it's perfect for phones, obviously, because the battery can only be a certain size. And essentially, ARM is a licensing company, and regulators have had a problem with this deal essentially from day one, assuming that NVIDIA would kind of maybe lock up this technology for their own chips and require suppliers like an Apple or others out there to really go through them and maybe start to raise prices and those types of things. It looks like ARM will remain independent and likely go public some other way. Moving on to Google, started the week at $2,676 per share, ended about $10 lower. It is below a technical range or an area of resistance. Now, we'll talk about that more. Google will report their earnings next week as well. Now, Google to invest $1 billion in India's telecom Bharti Airtel. My apologies. I probably butchered that. I'm sorry, but essentially this is a telco in India. They are going to invest about $700 million just in straight equity at about $9.77 per share and $300 million to potential multi-year commercial agreements. Essentially, what Google is doing here is they're building out the infrastructure in India by basically investing in these companies that are going to be able to do it for them. And obviously you need a amount of infrastructure in a country in order to be profitable, like a Google, to run ads and to run a network of advertising. And I'm assuming that's what Google's doing in India. And I think it's cool. I think it's cool. I mean, you have to ask somebody that lives in India, but I think that's actually pretty cool that Google's doing that. Again, from a business standpoint, some people might have privacy concerns and other concerns, but I think think just from a Google shareholder perspective, I think it's actually a pretty good idea. Google is to unveil Topics cookie replacement after FLOC flop. This is really interesting. We're going to get a little bit into the weeds of how browsers work. So essentially, back in 1994, a programmer termed the cookie, which was basically, it basically tracks every website, or essentially any website that wanted to track you. So say you were on GM's website, and then you go to eBay, and then you go to like a Sportsman's, you start looking at hunting gear or something like that. So you go to all these different websites, and then the cookie allowed the browser to kind of save that information. And what ended up happening is advertisers started using that. Okay, you looked at these set of hunting pants that you wanted to buy over here. Well, you didn't buy them. So what that advertiser was able to do is run those ads because they know you're interested in that. They know you're interested in cars. They know you're interested in different types of things. Now, the tracking has started to be reduced or limited to a certain degree, and Google was set to phase out third-party cookies by at least mid-2023. I don't necessarily think that's going to happen. So what they're going to do is they delivered this idea that they were going to do federated learning cohorts, or FLOC for short, is basically another version of a cookie, but it doesn't look like it's going to work. So what they're going to do is something called topics, essentially, and this is by pinpointing 15 baskets out of 350 topics. So essentially, if it looks like you like fitness, if you like transportation or travel, if you like collectibles, if you like investing, well, it's going to be able to track your topics, and then advertisers will be able to see up to 3 topics per user and 1 topic from each of the past 3 weeks. It'll keep the data for 3 weeks, and then it'll get cleared out. Essentially, just I would say a 21st century version of the cookie. It'll do basically the same thing. Now, here's the thing though. All these changes are meant to be like, oh, it's for your privacy and all this stuff. You know what it does? It makes Google and Facebook in particular, those two companies, particularly Google, since we're talking about them right now, it makes them stronger. Because if Google's having trouble tracking you, and obviously if Google has trouble tracking you and you're buying ads on Google, right? Okay, they have trouble showing you that conversion, because if I'm an advertiser and I pay $1 for a click, I want to make sure I'm getting a return on that. Okay, I want to make sure I'm making $1.50, or at least maybe my dollar back, or maybe I don't mind losing 50 cents per click because I'm gaining some information. There's long-term value of a customer, right? Well, look, if Google's having trouble showing me the conversion, and I'm big into online advertising, I'm telling you, this whole space has been just screwed up recently. Well, if Google's having trouble, guess who else has even harder trouble? The competitors to Google. They don't have nearly the technology, nearly the money to invest in this stuff, and nearly the database that Google has on their customers. So these protections, I'll put those in quotes, they only make Google and Facebook stronger. Honestly, that's what it ends up doing. The rich get richer when things like that happen. So I would not be concerned about any of that technology if you own Google. Moving on to Microsoft. This company reported as well. Initially, it was really weird. So initially they reported earnings, stock went down, and then Satya Nadella must have got on the call and just sang sweet music to investors, because this stock skyrocketed the next day. We started the week at 302. We were down below. I mean, we were down on this one, down to like 277 on this one. I was like, ooh, this one looks like it wants to go lower. And then they had the call, and this thing snapped back to about $308 per share. Interesting from a technical perspective. We'll show it to you here in a moment. Microsoft surges following their Q2 release. We talked about how they earned $1.7 billion in revenue. That was good for 20% year-over-year growth. Obviously, we talked about how Apple grew at 11%. Obviously, they're closer to over $100 billion worth of revenue, so nearly double the revenue. But look, it just shows strong growth over at Microsoft. All of their products, from LinkedIn to Azure to the business products, all were humming and looking very, very good. This obviously all on the heels of making that big acquisition announcements of Activision Blizzard. Moving on to Tesla, start of the week much higher, 977. They also reported their earnings. We saw today we broke a very key technical level over at Tesla. We'll talk about what that means here in a moment. End of the week at about $846 per share. Here were the earnings over at Tesla. Their revenue came in at $17.7 billion. That was 65% growth year over year. They beat expectations on that revenue revenue side by about $1 billion. What I think is probably the most impressive thing about Tesla is their automobile gross margin is 30%. I mean, that is just unbelievable when we talk about cars and really any kind of manufacturing outside of probably Apple. To maintain and get 30% margins on that, just absolutely fantastic. Their CapEx stayed relatively the same, and this company is starting to print out cash flows. Look, I understand this company's got a $940 billion valuation, and we're talking about $17 billion in revenue, but we are growing that very rapidly, 65%, and we've got free cash flow of $2.78 billion. So from a valuation perspective, still obviously wildly overvalued from that quote traditional sense, but when you take a step back, you start looking at things. What I liked about Tesla, and we talked about this on our video, they're not going to release the Cybertruck this year. They're not even working on the $25,000 car. They're not really working on the Semi right now. They're going to stick to what works and look at the results it printed from a financial perspective. So I would expect if Tesla just keeps its head down and keeps grinding, it's not going to get the kind of the sexy headlines of a new car, a new product, and certainly other EV makers might take those headlines from Tesla, but these operating results are absolutely fantastic, and I think they're just kind of milking it, okay? Just strike while the iron's hot. Whatever analogy you want to use, I think they're going to do that. Now, they talked about also on their call this Austin ramp up. Both gigafactories in the works right now in Austin and in Berlin look like they're going to start delivering customer cars probably by the end of March, and you should see these 4680 batteries come out of this Austin plant as well, and eventually I think out here in California. And these batteries have a lot of benefits to the end consumer, but financially as well to Tesla. They are more profitable batteries than the ones they're putting in the cars right now. They didn't predict that their automobile gross margin would go up due to those batteries, but I have to imagine the larger mix of those batteries, you keep putting those into cars, it'll at the very least, I think, maintain these margins, if not continuing to move them higher. Moving on to the technical segment of the show, and this should be interesting. Facebook obviously reports their earnings next week on February 2nd. This company is underneath. I have this green line right here. Why don't we just flip that to red, because now it's acting as resistance. You notice we're just underneath it. I mean, we're hugging this line, and so I think investors are just waiting to see what happens with Facebook. I tell you what, you get earnings stinker next week, guidance, maybe, you know, there's a misstep on the conference call. This stock trades lower. You have your first opportunity. I'll call it south of about 260 on this one. You get this, say we shed off $40. I mean, that would be more than a 10% move, but we saw Apple pop 10% this week. We saw Tesla go down quite a bit yesterday, and then heading into today, it bounced back. So these stocks are moving like double digits sometimes in a week. You get a pullback on Facebook down here. Now, the opposite effect is if Facebook puts up a major winner on that earnings side, and you're just going to go back up here and retest this cluster of sideways consolidation. My guess is, yeah, you could come 10% higher into the 330s, 340s on this one. Your upside, here's the thing with these things, is your upside is kind of probably back up here to 350. And so these are basically in the middle of what I would call a range. You've got, you know, a level of support down here at 250, and you've got some resistance up at 350, and you're sitting here right at a 300. It makes a little sense. Investors are little, I don't want to say they're confused, but they're just waiting for the results, and that's what we're waiting with Facebook. If you get a big pop up here, I don't think it really signals a buy. I'd really want to see it get all the way back up to the all-time highs. You get back up to the all-time highs of 380, you could play the breakout there. I would expect, just like Apple, I'll show you that in a moment, it would reach a level of resistance here, and it'll be interesting to see how those stocks react in the coming days. Now, I talked about how Apple reached a level of resistance. The stock before the earnings was actually down here at a bed of support. We have this green line down here at about 155, 156 per share. You see this big green candle here. This was today after the earnings report last night, and it busted up above a level of support here. I'm going to make this a little thinner. It's not like the best level. Now it's actually support. It was resistance before. Now this level at 168 was an area of resistance, and we broke our head above it. But your upside with Apple, is really, I think, just coming back up here and retesting the highs. Okay, yeah, that's $16, $17 higher on the stock, but I would expect as this stock got back up here to the 180s, you'd have some selling pressure and you could get this one to pull back. Okay, I wouldn't necessarily expect this one to bust up through those highs. Maybe if the Federal Reserve, pulls off their rate increases or something crazy like that, you get stimulus checks or something. I don't know, but I would not be running out to buy this one. I would wait until I think we're going to start chopping on this stock, in my opinion. Moving on to Amazon, much different story here. Really interesting, very much like Facebook. In fact, we've broken through this area right here at 2,900. It's a green line. Now it's red because it's resistance now. It was support. When I have these lines in green, it basically means it should be some support. Now this red line is resistance, but again, we talked about how Amazon is reporting their earnings next week on February 3rd. And so that's what investors are waiting for, okay? A break above here could actually signal a buy. This is a little bit different than Facebook because you have so much more upside until you get to the highs on this one, where the rest of these stocks, like I show you Facebook, you're pretty close to the highs, okay? You're not that far off, okay? Whereas Amazon, you're pretty far off, okay? This stock is down here at 2,800. The highs are $1,000 higher, up at 3,800. You get a good earnings report, it could get the momentum back in this stock. You get a bad earnings report, and I've got a green line down here because that's really, honestly, kind of the closest area of support. I'm not saying that this stock would get all the way down there, but I'm saying it's possible if they really lay a brick on that earnings call. And look, we got a new CEO. Jeff Bezos ain't there anymore, okay? He's out in the Bahamas chilling on his boat. This could take a dump all the way down to about $2,000 per share. That would be, in my opinion, an absolutely fantastic place to buy this stock. Again, pending that earnings report that we'll see on the 3rd. Moving on to NVIDIA, this thing's just in a steady downtrend. This stock reports earnings on February 16th. We had this downward channel. I'll just take this out because it's actually intensified. We are going down big and we're going down fast on NVIDIA. Okay, now we had find some level of support here. I'm going to take out this uptrend because that's kind of out of here now. This green line that I have here at $230 per share, that's still kind of support resistance right now. I'm not going to take this one out or change it to red, but we're just consolidating right at this area. I don't mind this area. It's not the best area. I have marked out down here in green. If this stock continues to pull back, you've got an area south of 150 or so. This would be an excellent spot, and in my opinion, to pick up NVIDIA shares if you're able to do that. We're just kind of in a holding pattern with NVIDIA. This isn't one I'd be super excited about. Now, moving on to Google, this one also broke, very similar to Amazon, broke what I would call not necessarily a critical area of support, but an area that was acting as some support, but then it popped right back up. I think you could almost push this line down here. It looks like the price action wants this to now be down at 2,500. I personally think with Google, we're going to be range bound because, as you know, if you've been following this channel for any length of time, this stock just went on a monster run and it just kept going up and up and up and up and up. And I think it's just natural we start consolidating really in this range that we probably have marked out with these red lines. So down here to about $2,500 per share and up closer to about $3,000 per share. You get closer to $3,000 per share, I would expect the sellers to step in this stock to pull back. I would expect us to be range bound until we get some kind of catalyst. That first one, quite frankly, could come on February 1st when this company reports earnings, but boy, it would take, and I would expect strong earnings from Google, but to pop this above the highs. Now, don't worry, if you do get above the highs at 3,000, I think you can play that breakout, okay? You could set a stop loss down here at 2,900, buy this breakout because that would just be a bullish move, and quite frankly, it would just put you back into the uptrend. And so I'm not saying that's going to materialize, but from a technical perspective, I guess it could. Moving on to Microsoft, did something really interesting this week, pulled down into an area of support down here at 280. If you got it down here at 280, man, you would have had to done it day. Look at the volume too over here. So this is showing you here, man, you had a lot of people step in and buy this one. A lot of, I would guess, smart money came in here and bought this one down here. Now, it's not the end of the world. If you say, oh man, I missed it down here at 280, not necessarily the end of the world. We've got this area right here. I'll change this to green since this is kind of an area of support now. I might even push this up a little bit. It appears right here at about $308 per share is where the stock wants to hang out. We could meet an area of resistance here. We've got another area up here at 319. So I would expect, honestly, Microsoft to come pulling back. Now, if it doesn't, that's incredibly bullish, but I think we'll, just like Apple, I think we could, if it's a bull case scenario with Microsoft, we just retest these highs up here at 344, and I think it would take a lot for these stocks to push back through the all-time highs. Just based on where the market is, where other stocks have pulled back, I don't know if people would really want to be piling new money into these stocks above the previous highs. I could be completely wrong about that, but you also see a similar formation starting with this one, just like we've seen with Google. I think we're going to go back into a sideways consolidation pattern with a lot of these stocks. We saw it after the March lows. This stock went sideways for several months, rocketed it up, basically went sideways again. I think that's where we're at. The range on Microsoft is down at 280 and the high point is at the 345, 350 range. I'd be looking to buy any of these stocks down at the bottom of the sideways consolidation range. Now, finally moving on to Tesla. This one broke the key technical level. We absolutely did not want it to break this 890 level. It did today, actually yesterday, and the stock even moved even lower today, closer to about $800 per share, but did rebound up to this 846. Now, I think investors are a little worried that maybe the news cycle passes Tesla by, right? They're not going to be releasing any new cars. They're just going to be humming and producing the cars that they are, and so we won't see a lot of new product announcements. Now, the company did announce that they will likely announce a new manufacturing facility sometimes towards the end of the year, whether that's here in the United States, maybe it's somewhere else. We'll see what ends up happening. Those negotiations likely are complex, revolve around employment and tax subsidies and those types of things. So we'll see how Tesla's able to handle that. But right now, in the intermediate term, it looks like to me, Tesla wants to go lower. I mean, right? We're on this mega downtrend. And so you would anticipate this to continue, and your first level of support is down here at about $720. You got an area between about 550 and 720 on this one. I'd be excited about Tesla there. I got stopped out of Tesla this week, and you might ask yourself, well, why'd you put your stop? Why you got a stop loss on Tesla? This is a highly volatile stock, and unlike Apple, unlike Google, unlike Microsoft and Facebook, those core companies as well, I won't put NVIDIA. NVIDIA and Amazon's valuation also a little stretched, in my opinion, from just a traditional valuation perspective. And obviously Tesla is as well. And so I got stopped out of this one here, but I'm going to be looking to get back into it down here between 550 and 700. And you might be saying, well, what if it doesn't go back down there? Well, that's okay, because the signal to buy this one is if we can get back up into here. What we're looking for right now, we're on a major downtrend, okay? We've been just going down from the $1,200 mark back in January 4th. The stock has literally barely hesitated and just continued to go down and down and down. In fact, this is like a $500 move on this stock. So it's not inconceivable that it couldn't do it again, right? Okay, when you're talking about a stock with a valuation that is just in the stratosphere, it's not inconceivable that it'll do it again. Also, you have a stock that's just had this monster run on it that it can't, this thing can pull back. I'm not breaking any news here. Now, we're still, believe it or not, we're still just locked in this upper trend. So I don't mind it here. That's why I'm trying not to talk out of both sides of my mouth with Tesla, but I didn't mind getting stopped out of this, because if we can break back above the $900 level, what that'll do is we'll at least create some higher set of lows. Right now, we're just creating lower sets of highs, which means this stock is in a major downtrend. We get back above here on 900. This is when I'll re-enter the stock. And so look, it's okay to sell stocks. It's okay to have stop losses. I think the most important thing is, number one, understand that. Number two, put those into your portfolio, put that into your investing strategy, okay, especially in a market that's very volatile. But even second to that, which I don't think gets talked about enough, and I probably don't, I'm not trying to blame other people, I'm saying I don't talk about it enough, is have a plan to get back in. Okay. And so my plan with Tesla, I absolutely want to be in this stock. Look, I just bought a Tesla. I got a couple more on order. I love this. I love the cars, love the product, love the future of this company. My plan to get back in is if this downtrend continues, I'm getting back in down here, 550 to 720. If this downtrend is temporary and we reverse, I'm getting back in here up at 900. That's my plan with Tesla. Hopefully guys enjoyed this video. Hopefully you have a great weekend. Go Cincinnati Bengals on Sunday. And I'm rooting for the 49. I got season tickets to the 49ers, and I'm a long time, like 30-year Bengals fan. This weekend should be exciting. Hopefully it is for you as well. Good luck with your investments.